Hello and welcome to Morning Markets. I'm Roger Peterson. Thank you very much for joining us. Here are some of the stories we're tracking for you in the BNN Bloomberg newsroom. Prime Minister Mark Carney has landed in Australia after wrapping up his trade trip to India. Carney is expected to meet business leaders in Sydney as Canada seeks to build on strong intelligence ties by broadening collaboration in defense and trade. Carney will also meet with Australian Prime Minister Anthony Albanese and address the Australian Parliament before leaving for Tokyo. The price of aluminum rising after Qatar's state-owned energy producer said it would halt output of the metal. The announcement comes as the Iran war continues to impact supply lines for metals throughout the Middle East. Iranian attacks have forced the shutdown of Qatar Energy's major LNG plant, and traders are bracing for widespread disruptions to supplies as the U.S. says there is no fixed timeline for its military action. Saudi Arabian oil giant Aramco is seeking to reroute crude away from the Strait of Hormuz as the route remains closed due to the escalating war in the Middle East. According to reports, the world's biggest oil exporter is exploring the option of delivering more cargoes to a port in the Red Sea. The move is aimed at avoiding production cuts. The report comes after Aramco was forced to shut down its biggest refinery following a drone strike. And taking a look at the markets, we're now seeing a reaction to what is unfolding in the Middle East. It is just in a nasty, nasty day. It's everything in the red right now. I believe all the sectors are off by 3.44% from the record high. And the run we had last week has pretty much been wiped out. South of the border, it is not much different. Everybody is down across the board there, no matter where you look. S&P 500 up by 2.1, almost 2.2. Dow Jones 2.3, and the Nasdaq 2.35. As we were just talking about, the TSX Composite saw a drop of more than 1,200 points today so far. Who knows where it will go? What are we at now? We've bounced back slightly, but not by much. We're below 1,200 points now. Our next guest says we're seeing a global market sell-off. Let's bring in Michael DeHaal, Senior Portfolio Manager, Michael, of DeHaal Investment Partners at Raymond James. We saw it in the Asian markets overnight that they were already starting to react. Yesterday was strange because pretty much everyone finished in the green. And then today, it's like everybody woke up.
Yeah, exactly. I think yesterday's market there was some kind of hope that this Middle East conflict would kind of resolve quicker than what people expected. But I think this morning people woke up and realized that, hey, this could go on for, as Trump mentioned, 4 to 5 weeks, if not longer. Also the risk to oil markets with the Strait of Hormuz effectively being shut down, and that can cause higher prices and also increase the risk to inflation as well.
And so do you think this is one day, or could we see more of this tomorrow?
Roger,
and who's buying?
Right, I know what's buying, obviously, right? The markets, like you mentioned, global markets all across the board. Canada, U.S., Europe, Asia, we're seeing a massive sell-off across all asset classes. Usually when there's a market sell-off, geopolitical tensions, there's a bid to gold. Even gold is down today, lower. Copper, energy prices, energy stocks are lower, right? So it's a sell-off across all asset classes. When could this end? We don't know. The story's changing literally by the hour, if not by the minute, right? So I think until investors get more clarity on what's the next steps to this conflict, the volatility in the markets could continue for some time.
And I guess it really feels like the only clarity will come from the president himself. We saw his comments earlier, and I think that's what fueled all this today. So I guess we're going to await something else from him. But the idea that this could drag on, he said we didn't know. He said he wasn't sure.
Yeah, exactly. And that's what sparked the market sell-off today, right? It was kind of remarkable yesterday to see the reaction. Markets in the mornings, the markets were lower and recovered, and the markets did end up positive on that positive note. But today it's a different story. And like you mentioned, the president saying that we don't know when the end's going to be. This could drag out. If it does drag out for a long time, there are obviously economic risks to the global economy. Recessionary pressure risk could increase as well as it's dragged drags out longer and longer.
And of course, inflation a concern with this as well, right?
Yeah, absolutely. Oil prices are going higher. As they go higher, gasoline prices go up. If there's impacts to global trade, higher prices across all goods and services.
So what are you doing with this uncertainty then? Where are you?
Uncertainty, we always tell investors.
That might be a kind word, actually, saying uncertainty right now.
Yeah, no, exactly. You know what? We always, right from day one, we always send investors be diversified. Obviously, days like today, everything's getting thrown out, with a bathtub, right? And so we're telling patients, stay calm. Mm-hmm. Do not panic. Days like this, we know in history that days like this do pass, periods like this do pass. It can come quickly. If we get a resolution, quickly, markets can turn around. So A, do not panic, and B, be more tactical. Look at companies, sectors, even stocks that may not get affected if this does drag on for quite some time, right? So companies have good free cash flow, good strong balance sheet, and good liquidity positions.
And where are some of those right now?
A company that we're seeing opportunities right now is Apple. Apple, they had a great earnings report when they reported Q4 earnings, great earnings momentum on revenue growth, earnings per share. They're increasing their gross margins, their iPhone sales for iPhone 17 and the new 18. We're seeing great momentum on that. So that's an area that we do see that there's opportunities right now for investors. It's
kind of ironic because they were taking the big hit with AI, right?
Yeah, they were
the unwanted stepchild of the Mag 7 for a bit.
Exactly. And Apple, they had some criticism that they're not spending enough money on AI or investing as much relative to the other Mag 7 names, right? But they are very strategic. They do have a really strong cash position, which they can invest more money in AI, acquire, or redeploy into share buybacks or dividends even, right? So.
All right. Things are going on. There are normal things that are happening. Paramount Resources coming out with their earnings, with everything that's unfolding. Your thoughts on it?
Yeah, great earnings report. They had a great top line growth, right? There were some issues with the margins and all that, right? But overall, that oil and gas sector, it's a great, obviously as oil prices do go higher, energy prices go higher, those stocks do continue to have a tailwind with increased free cash flow.
And what now tailwinds right now with everything that's unfolding, which what could possibly be a headwind if this is resolved quickly? Could people run the risk of diving in too quickly into some of the oil, or are they pretty solid right now and they look like they're ready for a run?
Fundamentals right now for oil, energy equities do look really strong, right? Even looking past the conflict, we do think energy sector is a sector that you do find opportunities, right, for the next 2, 3, 4 years, right? So with fundamentals strong, with increased, demand globally, it does have strong fundamentals beyond the conflict itself, right? But if this obviously does drag on, there is a risk that it could dampen investments.
And I think we have to remember too, oil is up right now over the last 2 days and it's surging, but it's still down for the last year, right?
Yeah, it's still down. I think we're back to levels around middle of 2020, late 2024, right? So we are we're not past the highs that we've seen the last couple of years, right? So we do have room to grow. But as oil starts increasing $5, $6, $7 per day, it can reach those levels.
It won't take long to get back to it.
It won't take long, right? So it's something that we're keeping a close eye on as well. Obviously, like you mentioned, higher oil prices, it creates more inflationary pressures for consumers.
And before we go, any other stocks you're keeping an eye on right now?
Consumer discretionary is something that we're keeping an eye on the negative side, right? So, stocks that are exposed to the consumer. If this conflict does drag on, higher inflationary pressures, consumer stocks, discretionary stocks could be a bit of a headwind going forward.
Yeah, Best Buy just had their earnings out today.
Yeah.
It wasn't bad.
It's not bad. It's not
wasn't
bad.
All right, Michael, we have to leave it there, but thank you as always for joining us.
Thank you, Roger.
Michael DeHall is Senior Portfolio Manager of DeHall Investment Partners at Raymond James. Coming up, we'll bring you our conversation with the CEO of Build Canada Homes. Stay with us. International Women's Day is coming up, and we are taking a look at companies being led by women who are changing Canada's economy. Build Canada Homes is a national agency tasked with accelerating the construction of affordable homes across the country. For more on this, we sat down with Annabelle Lau, CEO of Build Canada Homes.
It was announced by the Prime Minister September 14th. I started a couple of weeks after, so October 1st, so just 5 months. Some days it feels like 5 years, some days it feels like 5 minutes, to be honest with you, because there's so much to do.
You're going to tell me you haven't resolved everything yet, right? Is that's what you're going to say next? It is a challenge. Where do you even turn your attention first?
It is a big challenge. It's a challenge that the country has been facing for a significant amount of time. But for somebody that has been working in this area and in the housing sector for so long, it's really inspiring to see the momentum and commitment that is behind this organization in terms of the government and the partners as well. The nonprofit sector, the private sector, they want to come and work with Build Canada Homes. And that's where the solution lies. It's about partnerships with other orders of government, because there's not going to be one order of government that is going to solve this issue. We need all orders of government to work together to tackle housing. We need partners in the private sector, in the nonprofit sector, and we need to bring everybody with their best skills and their best tools to the table. And that's what Build Canada Homes is all about, is building a set of tools that the federal government has available. In this case, with Build Canada Homes, we're bringing land, public federal land, and we're bringing very flexible financial tools, which is really important, especially in the times that we live today. So we were initially capitalized with $13 billion, and we are deploying that money in flexible ways to make sure that we get shovels in the ground. And there's three key things that we need: speed, scale, and affordability.
All right, on those notes, Ryan?
Just curious, with the changing dynamics in the housing market, obviously the condo market in urban centers has softened significantly, and the immigration dynamics have changed. So just curious, where is the greatest need, and where are you guys focusing in terms of location and structure, I guess, to accomplish your goals?
Yeah, so we're focused on affordable housing. So there's a huge mismatch on the price of housing that Canadians can afford and what we have been able to produce. And it goes all the way from very deep transitional housing to what people call workforce housing. So that's the area that we're focusing, and that need is across the country. The flexibility that we have as Build Canada Homes is that we are able to respond to the most the largest needs in each community, because we don't have a program across the country. We are flexible enough to deploy our land and our financial tools in a way that responds to the local needs. But we see the need across the country in terms of affordability, and that's the area that we're really focusing. Deploying the $1 billion that the Prime Minister announced in transitional housing, deploying the workforce housing through our public lands and through the money that we have available for partnerships with the private sector and the nonprofit sector. We're actually seeing a lot of appetite because the market, as you mentioned, is slower in areas like Toronto, Vancouver is very, very slow. There's a lot of appetite from a lot of these firms, especially in the private sector, to come and work with us because they want their workers to work. They want to put their workers to work. They look, a lot of them are looking at their projects and coming to us and saying, can we partner? Can we provide some affordable housing? Can we partner together to get shovels in the ground? So there's a lot of appetite to work with Build Canada Homes on both parts. We're very eager to get out there and to work with the private sector and with the nonprofit organizations, because we're keen on making sure that we create capacity in the nonprofit sector. But there's an opportunity because the market is slower in certain parts of the country to actually scale up the affordability and the affordable housing.
All right, I'm just going to jump in with the private sector. I mean, obviously the big thing is profit, and I imagine they must have a fear of working with the government because of red tape and the bureaucracy slowing things down. Is any of that being reduced to help speed this up?
So that's one of the key things that Build Canada Homes is bringing to the table through our partnerships that we're doing with provinces and with municipalities. We're trying to push implementation tables to get these projects that we're getting involved approved quickly, even in areas that we don't have direct control in the approvals, but also through the flexibility that we have in deploying our funds. It's about making the project work. It's not about a long application that you have to check the boxes. It's about what is needed in this project to get shovels in the ground. So that's the advantage of Build Canada Homes, and the appetite that we have, and we're calling on our private sector partners and the other orders of government to come with even bigger portfolios, with a portfolio so that we can start not only looking at a project by project, but create a pipeline, because it's good for them. It gives them the certainty. It's good for timing. It gives them speed on approval because they know it's coming. And it's good for the other part of our mandate, which is being a catalyst for modern methods of construction. Because what we've heard in a lot of these factories, that we need that pipeline. So the more of a pipeline we're able to create, the better.
All right. And just quickly, we're out of time, but are any projects officially started? Just very quickly, like 20 seconds. Yeah.
We have started in Nunavut. We have site servicing in most of our 6 sites. And there's a number of projects that are starting shovels in the ground over the next few months. We have already approved and are working on almost 9,000 units, with a few more to be announced over the next few weeks. And some of them have already have started with shovels in the ground, and we're particularly proud of the work that we've been doing in Nunavut.
That was Annabelle Lau, CEO of Build Canada Homes. Coming up, Best Buy stocks are up sharply after the company reported Q4 results. We'll find out why when we come back. Prime Minister Mark Carney wrapped up his 4-day trip to India with the signing of numerous deals worth billions of dollars. CTV's Abigail Beeman has more.
Prime Ministers Mark Carney and Narendra Modi launch a new phase of the Canada-India relationship, and Carney invited Modi to visit Canada.
There has been more engagement between the Canadian and Indian governments in the last year than there has been in more than 2 decades combined.
We will turn ideas into global solutions.
Announcing 5 memorandums of understanding on energy and AI and 10 commercial deals, including a highly anticipated $2.6 billion deal to sell uranium from Saskatchewan to India.
It's going to be good for the electricity outbuild here in India, as well as good for the economy and good for, in particular, northern Saskatchewan and Canada, I would say, as well.
The pair committed to finalizing a new broad trade deal by the end of the year.
Business loves certainty, and particularly at a time like this where uncertainty is rampant. Trade agreements give us some confidence that we can invest in each other's countries.
Carney has not taken any questions since a government official suggested Wednesday India was no longer actively carrying out foreign interference or transnational repression, and canceled the first media availability of the trip today, blaming scheduling. The Foreign Affairs Minister for the first time gave a clearer assessment of the comments.
The words of the senior official are not words that I personally would use. I agree with his comments relating to the guardrails that we have in place.
But the bilateral relationship has become so warm, Canada welcomed Indian government officials, including the High Commissioner, onto the Prime Minister's plane from Mumbai to New Delhi. Carney's office said Modi accepted the invitation, but there's no timeline for a visit to Canada. Abigail Beeman, CTV News, New Delhi.
Paramount Resources reported an increased 2026 production guide and expanded land positions. For more, we sat down with Jeremy McCrae, Managing Director of Energy Research at BMO Capital Markets.
There was something in this quarter for everybody. So we saw the production guidance revised up by 2%, but not only that, we saw a 15% beat on the cash flow, 7% beat on production. There really was something here for everybody. And it goes back to what we're seeing from Paramount as they build up their new Duvernay position, have their facility, have better runtime, and it really just should give a lot of encouragement here for what we could expect for the rest of the year.
What are some of the other like key takeaways from the latest earnings report?
So the other thing that I think is encouraging here is when you look at their Duvernay results, this is where the big core of their production is coming from here right now. We're seeing these results come in actually even better than the type curve and what we were expecting. So not only do you get a better IP rate, but the wells are declining at a lot shallower rate, which basically means you can get that not only a quicker payout, but that 2 times payout, effectively where your profits are here. And so as we see more of these well results come into better runtime facility, it just means there's more, effectively production and cash flow that we should expect here for the rest of the year, also heading into 2027 and 2028 here. Basically, the subsurface is also working just as well as what we're seeing on the surface as well.
I wonder, though, with everything that's happening right now, with the conflict in the Middle East, everything that's happening in Iran, like how does Paramount Resources fit into kind of the broader sense of what's going on today?
There is a lot of volatility in the market here right now. They'll benefit from the higher oil prices and natural gas prices that we're seeing here. And I think it's difficult for anybody to have a perception of where these commodity prices may land here. But in the meantime, it is helping, have Paramount, realize a better commodity price. I think even before what we're seeing in Iran, there is a change in tone of what we were seeing with energy investors and more so generalist investors coming back into the sector. Investors seem like they're looking for hard assets. And despite where we were seeing with commodity cycle lows with oil, it was seen as a good position to start coming into the sector. So when Paramount has, just under $800 million in cash as well, too, it is a bit of a defensive play. So when you add, some of the good production beats and encouraging signs for what we could see for the rest of the quarter, it's not surprising why the name is one of the better performing names here today.
When you add the uncertainty in, though, like obviously right now, as you say, oil prices surging, natural gas prices are up today, too, particularly in Europe. But the uncertainty that we continue to see here, especially in terms of what's going to happen coming out of the Middle East, is that a headwind, do you think, for this company?
I wouldn't say necessarily a headwind. We're seeing a bigger movement here just in terms of how energy is seen in the global, portfolio here, where, when you look at it, the S&P 500, it only represents 3% of the index. So we're seeing more investors saying, just given the volatility, what we saw with Russia back a few years ago, now what we're seeing with Ukraine or with Iran, energy is a part of the portfolio that everyone should probably own in some way or in some weighting here. And it's just there are geopolitical events, and it's just a good reminder that energy is a good part and it should be a part of the portfolio. So that's the broader movement that we're seeing. I don't think anybody really wants to take a position on where exactly what we're going to see with the commodity price, but it is a reminder that commodity prices, likely could stay elevated here for at least, a few more months here, just given the uncertainty that we're still seeing.
For sure. Okay, so that's not a headwind, you would say. But are there any other headwinds, really, that this company is facing? Like this latest earnings report seems pretty rosy.
It is, and I think the only thing, if investors were to have a pushback here, is what we're seeing with natural gas. A lot of the natural gas that we're seeing here in Canada with AECO pricing still hasn't got the same benefit that we have seen in down in the U.S. and especially in Europe here. So as we start to see more LNG projects get approved and get built, that ultimately should improve things. But in the meantime, as we start to see still more natural gas come on by all producers here, AECO prices still remain, subdued.
Okay, so in terms of Paramount Resources as an overall investment today, how do you like it? Or is there other Canadian energy companies that you would prefer over this one?
We really like Paramount. Paramount is one of those names that just, quietly behind the scenes continues to grow and grow and grow. And if you look at the whole sector today, it's going to be one of the fastest growing companies looking to double their production here by the end of 2027, up nearly 2 times from where it is today. So for investors looking for growth and no debt, Paramount is that name that stands out. Outside of the Duvernay and the Montney, other names that we do like are in the Clearwater here, where you do see see, some of the better rates of return, where a lot of companies are working on waterflood, and these are, names in the Clearwater like Tamarack and Headwater and Topaz are seeing the benefit of, waterflood, which is somewhat new to a lot of investors. So this is where we're seeing capital flow into those names here as well.
And that was Jeremy McCrae, Managing Director at BMO Capital Markets. Coming up, we'll speak with the CEO of Teck Resources on the PDAC floor about the company's outlook for 2026 following its recent fourth quarter revenue and profit increase and ongoing merger with Anglo American. Stay with us. Shares of Pet Value are plunging today. The pet food and supply retailer reported adjusted profit for its latest quarter that missed estimates and also posted revenue that came in below expectations. Pet Value's earnings and same-store sales also fell short of what analysts were expecting. One bright spot, the company boosted its dividend by 8%. Shares of Roots are trading higher. That's after the Canadian clothing retailer said it's exploring a strategic review that may lead to a sale of the company. Roots says the move is to analyze options in order to boost value for shareholders. Roots opened its first location in Toronto in 1973 and has more than 200 stores across Canada and Asia. Shares of Pinterest are higher today, about 7%. Activist investor Elliott Management is investing $1 billion in the social media company to help fund its efforts to buy back shares. The latest share repurchase will be carried out as part of a new $3.5 billion program authorized by Pinterest's board. The company also plans to buy as much as $500 million in additional shares from cash on hand. And a quick look at the markets. We'll make it a very quick look, although TSX has bounced back relative term here. It's off by about 2.67%. It was off more than about 1,200 points at one point. Still, though, well off for the day after yesterday's record close. South of the border, similar situation. They're bouncing back a little bit too, but still off for the day. The S&P 500 down by 1.7, Dow 1.8, and the NASDAQ about 1.8 as well. Well, let's head back to the conference floor at the PDAC Mineral Exploration and Mining Convention, and that's where we find Andy Bell is standing by with the CEO of Teck Resources. Andy.
Thank you very much, Roger. I'm here with Jonathan Price. Of course, he heads up Teck Resources, and he will ultimately become the deputy CEO when Anglo American and Teck combine. It's great to have you here, Jonathan.
Thank you, Andy. Good to be here again.
Things often don't happen quickly, and so you're still waiting for approval from China and Korea, and that could take up to 18 months.
So we got off to a very fast start.
Yeah.
We announced the transaction in September. In December, both sets of shareholders, Teck and Anglo's, overwhelmingly approved the transaction. And then we got the approval from the Canadian government under the Investment Canada Act in December as well. So that was fantastic. We're working our way now through the antitrust and competition approvals. And as you say, we have South Korea and China outstanding. Our expectation when we announced the deal is that it would take us 12 to 18 months to complete. That still remains our best estimate here, which says sometime between the end of Q3 this year and Q1 next year, we will expect to complete the deal. Very exciting, a lot of work going on now in integration planning, so we can really hit the ground running when the deal closes.
But it's odd, you can't actually combine the management yet.
No, so we operate as two independent companies today. So, we at Teck, very, very focused on our operations and the performance of those operations. We had a very good Q4 and a very good year last year. We delivered more than 450,000 tons of copper. We had our best year ever from a safety performance, and we sanctioned the Highland Valley Copper Mine Life Extension in British Columbia. That will extend the life of Canada's largest copper mine for around 20 years for an investment of more than $2 billion Canadian. So we had a very, very good 2025. We're looking forward to getting this this deal completed, hopefully in 2026, there's huge opportunity in the combined portfolio of Anglo and Teck. We see around 1.2 million tons of copper production. It'll be the 5th largest copper producer in the world. It's based on a foundation of 6 world-class copper assets, as well as high-quality cash-flowing iron ore that comes from Anglo, and of course the established zinc business we have here at Teck, and lots of embedded growth options. So in Chile, for example, where we have our Quebrada Blanca mine, next door Anglo have a share in the Collahuasi joint venture. We see the opportunity there through connecting those two operations to produce an incremental 175,000 tons of copper per year from 2030, and we've estimated the annual EBITDA generation from that could be as much as $1.4 billion. So very exciting opportunities.
One thing I'm curious about, though, Quebrada Blanca, like any big mine, has had teething troubles, and it was a cloud of your stock. Should you have, and I know this is kind of water under the bridge, but should you have waited until you'd resolved everything at QB2 before doing the merger and remove any discount on the shares?
Yeah, so things at QB are going very well now. We made significant progress in the 4th quarter of the year with respect to the construction of the tailings facility. We made some changes there with some of the technology where we separate sand from tailings. The rate of dam construction has increased significantly. We ran through the 4th quarter of last year and through the first 2 months of this year with no impediment whatsoever from tailings restrictions. As a result, our production is up, our profitability is up, our cash costs are down. So we're in very good shape today with QB. Very pleased how that operation is running.
And the merged company will be about a 70% weighting in copper?
Yeah, that's exactly right. So when we close the transaction, we expect to be just more than 70% copper. But of course, with some of the growth that we have in the near term, and I mentioned QB Collahuasi, there are other near-term growth opportunities in the portfolio, which should continue to see the proportion of copper in this new company increase from that 70% level.
And of course, you have your big zinc smelter in Trail in BC. Just remind us, the rare earths you used to struggle to find people to buy the stuff. It was a byproduct, but now there's a ready market.
It's been a very interesting development over the last 12 or 18 months. You know, we've predominantly produced zinc and lead from that smelter, but the ore that we process there contains germanium, it contains antimony, it contains indium. These have become very strategic metals, of course, because they go into defense applications. They also go into various high-tech applications. And this has been an area of where we've seen China from time to time cut off supply into North America. What we offer at Teck, of course, is a reliable source of supply to the North American market. Excitingly as well, though, we have the opportunity to expand that facility to increase our processing of germanium, but also perhaps in future process and produce gallium as well. All metals that are very much in demand at the moment. And the production from that facility alone could be so significant that we could meet the needs of all of North America and potentially even the G7 or NATO countries. So we're looking at a future investment there to expand that capacity, but it is a very, very strategic Canadian processing facility.
One of your big jobs right now is overseeing the integration, or planning for the integration, I should say. But will you be with the merged company for long, Jonathan, or will you go on looking for opportunities?
Look, I'm very excited by this new company. It's going to have an incredible profile. It's going to have incredible growth opportunities. I have a very high level of conviction in the outlook for copper and the structural tailwinds that support that market. And I'm very excited to be part of Anglo Teck, and I'm not planning on going anywhere.
Right. It must be a bit difficult. You were the boss, now you're the deputy.
I'm incredibly happy to have been part of putting this merger together. There are so many mergers that are spoken about that never get done. And this is a situation where two companies with similar strategies, with great assets, and importantly, similar cultures and values have been able to pull off something quite remarkable at a time when Canada and the world generally needs bigger, more resilient mining companies that can invest in some of these bigger projects for the future through this combination of balance sheets, but also the combination of great capabilities.
And you yourself will live in Vancouver?
Yes, I've been in Vancouver now for 5 years. I'll continue in Vancouver. The new company, Anglo Teck, will be headquartered in Vancouver, so all of the senior executive team will be based there.
Including the CEO?
Including the CEO,
right.
Yes, absolutely.
Yeah, you got the approval from Canada pretty quickly, all right.
We did. I mean, I think they understood the compelling strategic logic of what we were doing, but importantly, why this would be good for Canada. As part of the proposal that we put forward, we've committed to spend $4.5 billion over the next 5 years, including on the Highland Valley Mine Life Extension, but also on some of the future projects we see in the portfolio, including Galore Creek and Shaft Creek in the northwest of British Columbia.
Up in the Golden Triangle, and Galore Creek could be a truly big copper mine?
Absolutely. So today Highland Valley Copper is Canada's largest copper mine. That could be displaced by Galore Creek, given the size of that resource and the quality of that resource. We're currently working with the government here in Canada with the Major Projects Office. They have this North Coast transmission line that will bring much needed power to that region. We also need increased road infrastructure into the region, but that could unlock a whole series of developments there, including Galore and Shaft Creek, which would be very exciting for Canada and for us, of course, at Anglo Tech.
Jonathan, thank you very much indeed.
Thank you.
Oh, actually, before we go, I should ask you very quickly, what do you feel PDAC is different? We're tight for time. Is there a buzz in the air with gold at record highs?
Massively so. I mean, you look at the whole commodity suite is enjoying strong tailwinds at the moment, and this place is buzzing and booming. It's fantastic to be here.
Thank you, Jonathan. Jonathan Price, CEO of Tech. Back to you guys.
All right. Thank you very much, Andrew. That was Andrew Bell, and he's down at the big mining convention. Of course, coming up, Best Buy stock is up sharply today after the company reported Q4 results. We'll find out why when we come back. Shares of Best Buy are getting a lift today. One of the few to actually see a boost after the electronic retailer posted better than expected adjusted profit. It's up about 5.3% right now. Let's get more on this from Anthony Chukumba, Managing Director at Loop Capital. Anthony, thank you as always for joining us. One of the few bright spots, I guess you can say, on the markets today with everything else that is unfolding. What's driving this?
So I think it's a combination of a couple different things. First off, as you said, earnings did come in about 15 cents ahead of expectations for the fourth quarter, even though they did have a top line miss. But I think the bigger thing is that their guidance for 2026 was not as bad as expected. I think that there was a lot of concerns out there about these memory shortages, and that definitely impacts PCs, to a lesser extent smartphones. And so I think that there was this whisper expectation that their guidance was going to be significantly worse than where it came in because of those memory shortages. So I think it's the combination of those two different factors.
So you say it's not as bad, but is it still bad though?
I wouldn't say it's bad. I mean, so essentially they earned about $6.43 in 2025. They're guiding to call it $6.30, $6.60 in 2026. So, call it flattish at the midpoint. Now, look, the U.S. macroeconomic environment remains quite challenging. Unemployment has started to rise a little bit. Wage growth has slowed down. The housing market continues to be quite bad. Consumer confidence is pretty low now with what's going on in Iran. Gasoline prices, which have been declining for much of 2025, are starting to rise again. So in the context of all that, I think that flat it's not amazing, but it's not terrible either.
And of course, all this was put together before what has unfolded over the past weekend. How long, if anything, with what's happening in Iran, how long will that have to go before we might start seeing an effect on companies like Best Buy?
Yeah, that's a great question. I think that what it's really going to come down is what happens with gas prices, right? If we see gas prices spike, that, could have an impact on Best Buy. I mean, it will have an impact on all retailers, quite frankly. Look, at the end of the day, gas prices are really important to consumers, not only because they're filling their tanks, but there's a psychological impact as well because they're passing gas stations every single day. And so if suddenly, gas, which is right now is around, call it like $3 a gallon on average in the US, a little bit less than that, suddenly for, let's say, $3.50, $4, there's no question that's going to impact consumer sentiment and will ultimately impact consumer spending.
All right, and just let's look back for a second. What were they doing right to kind of make this a better story than they had hoped for?
Best Buy SPY is doing a great job of controlling what they can control, right? In other words, they can't necessarily control product cycles. They can't control, sort of consumer demand, but they can control costs. They can control, things like, the relationship with their suppliers. There are some initiatives this year that were very encouraging. One is that they did set up a Best Buy marketplace, so essentially a third-party marketplace online, and they've seen great results from that. They saw $300 million of GMV from Best Buy marketplace just in the fourth quarter. They also have this growing retail media network, so what they're calling Best Buy Ads, and so those are both, very margin accretive. Now, they're investing in those initiatives, and so they're not necessarily seeing the benefits of those, but they expect to see those benefits going forward. So in terms of what they can control, I think they're doing a great job. And
these are the stats from, I think, the last quarter, but comparing with Amazon, they're fairly comparable with Amazon right now with some of their prices, aren't they? Are they maintaining that?
Yeah, so look, we've been doing pricing work, Best Buy versus Amazon, for quite some time. If we were having this conversation at this point, probably call it 10 years ago, Amazon was dramatically undercutting Best Buy on price. And so you had that whole showrooming concept, right? In other words, I'd go to a Best Buy store to check out the TV, but then I'd look on my smartphone and see it was $200 less at Amazon. And so I would buy from Amazon. If I was really cold, I would order right in the Best Buy store. What we have seen is that Best Buy has significantly invested in price. So they're basically at price parity with Amazon. So there's no incentive if you're in a Best Buy store, to buy that product from Amazon. You're going to get the same exact price at Best Buy. And, with Best Buy, if you actually want to get in the store because you want to get that same at that same time, right, you can do that. But the other thing is that Best Buy has, they've just overall really invested in their e-commerce operations. And so they have really closed the gap with Amazon in terms of site search, navigation, reviews, and also final mile delivery, because now Best Buy is shipping products from virtually all their stores. And so they can get products to the consumer just as fast, if not faster, than Amazon. So that's some pretty amazing cost cutting then for them to be able to offer all those things. They have been very, very, cost conscious for quite some time. And yeah, that did allow them to invest in price several years ago. And they've continued, like I said, to be very, very adept at managing their costs. All right. And just quickly, no price change, right? For you? We still have an $85 price target buy rating. Okay, Anthony, thank you for joining us. We appreciate it. Anytime. Anthony Chukumba is managing director at Loop Capital. Coming up, Prime Minister Mark Carney is on a 10-day Asia tour. We'll take a closer look with Bloomberg's Laura Dillon-Kane after the break. Market Call is coming up next. Today on the show, we have Keith Richards. He's the president and chief portfolio manager of Value Trend Wealth Management. He'll be taking your questions on technical analysis. Well, Prime Minister Mark Carney is now in Sydney, Australia, the second country of his 10-day trade tour. It comes on the heels of his trip to India, where he met with Prime Minister Narendra Modi. For more on Carney's trip to the Asia-Pacific region, let's turn to Bloomberg's Laura Dillon-Kane in Ottawa. Laura, thanks very much for joining us. We're going to look back, then we're going to look forward. First up, India, what came out of those meetings?
Well, I think the big headline announcement was the $2.6 billion uranium supply deal that Cameco signed with India. So this is a renewal of an existing agreement they had to supply uranium, but it is quite large, and it means that many millions of pounds of uranium will be shipped to India from 2027 through 2025 or 2035 rather. So it's a significant expansion, and it also marks this sort of new era in Indian nuclear energy, where they have sort of ended state control over the sector, and they're looking to attract private investment. So Mark Carney really undertook this trip with the goal of expanding markets primarily for Canada's resources. So he did so certainly on nuclear, and he signed a number of MOUs and agreements looking at expanding trade in critical minerals, oil, liquefied natural gas, a whole range of sectors where he's really looking to shore up new markets and turn Canada into essentially an energy superpower.
All right, hopefully some good opportunities there. Now, Australia, he's on the ground there. What will unfold?
Well, we do know that some executives from Canadian pension funds are joining on the trip. We don't know yet what will be announced in that area, but we do expect a deliverable on that front. Canadian pension funds already invest heavily in Australia, so they may have an announcement to make on some new money that they're proposing. There should be a signing ceremony in just a few hours, so around 4:30 p.m. our time. We know that Carney is undertaking a signing ceremony. We don't know yet what he's announcing. And then he will take questions from reporters for the first time on this trip. Following that, he'll meet with the Australian Prime Minister in Canberra on Thursday, and he will address Australia's Parliament in what's expected to be a speech that will build on the ideas that he unveiled at Davos. And he will meet with other lawmakers as well and likely announce some more agreements with Australia. And then looking ahead, he will close out the week in Tokyo, where he'll meet with the Prime Minister for the first time since her landslide election.
Okay, so a busy schedule for him, hopefully coming back with lots more of the good news category, considering everything else that is going on right now. Laura, thanks very much for that update.
Thank you.
Bloomberg's Laura Dillon-Kane. Okay, I'm not sure we want to, but let's take a look at the markets. We'll start on Bay Street, see how things are doing. It's actually coming back a little bit. It's a relative term for today, but at one point it was up by 3.4%. You can see now it's down by 2.37. And for the most part, pretty much every sector was in the red, but there are some gainers. Let's just take a quick look at that. Paramount Resources is responding. It's up about 5% right now on its Q4 results, so not too bad. So some optimism, but going the opposite way, there is a lot going on. Capstone Copper down 13% on a Q4 profit miss, and that just compounded, of course, by everything else that is unfolding. Aya Gold and Silver taking a hit, down 13.5% on gold prices dropping. Gold should be seen as a safe haven. It's not being seen as one right now. Pat Value down 12.7% on the Q4 results. And one other note, First Majestic Silver down 12.2% again. Same thing on those. And a few other movers here. Roots is up 5% on a strategic review as it looks to expand. Best Buy up on its results. Pinterest as well, also up. Now, the TS are down south of the border, similar numbers, off by 1.5% right across the board. We'll have lots more coming up on it. Thanks for watching Morning Markets. We'll see you tomorrow.